How are you? It's nice to see you again on my YouTube channel. Thanks for checking in. I am going to talk to you guys today about purchasing property in Portugal, tax resident versus non-tax resident. So first of all, one of the things that you need to know is before you purchase property, you show up, you work with a buyer's agent, and then you find this fab property. So we've talked before about the process of buying property. And one of the things you need to know is that having a bank account here is obviously a benefit for you because the funds are here. So everyone's clear that they can be released immediately. So always have at least 20% of what you believe your purchase price would be here. Opening up a bank account, here's a plug for Millennium. I just like them. So they're easy. Their website's user friendly. So Millennium BCP is my choice, and I've gone through a couple of them. Bank Inter, Novo Banco. I just like the service, and they all have service, but this one somehow has more branches, and there's some benefits to it. So you need to go in and open up a bank account. Before you do that, you need a NIF number, which is a version of a social security number. So getting a NIF number is technically free. If you can call the telephone, wait for 10 to 45 minutes on the phone, and then they pick up and you'll tell them you want a NIF number, and they say, cool, meet us in like Porto in 2 weeks. And those are your options. Sometimes it's like a driver's license. You kind of go where there's fewer people. So, or I can give you the phone number of a lawyer that I work with, and she'll hook you up for blah, blah, blah euros per person in your family. You sign a POA for that, and it gets taken care of. It should happen between 7 and 14 days. So you can do that from wherever you are in the world. And I suggest you do, because it's your portal to getting permission to be able to purchase a home here. So cart before the horse before the cart, NIF number, bank account. Set those two things up first and foremost. You cannot open a bank account, to my knowledge, online. You have to be here in person because there's anti-money laundering rules, and so they have to see you as a human being. So you have to come here and stand in front of them. But when you get your NIF number, you have two choices. You have a non-tax resident NIF, and you have a tax resident NIF. And they can be switched back and forth, so it's not an issue how you start with one. But definitely, if you know that you don't have your visa yet and you're just going to do a 3-month on, 3-month off, 3-month on situation, non-tax resident NIF is the way to go. If it lies dormant, nothing ever happens with your NIF number. So you can have one and not come back for 10 years and it'll still be there. So getting a NIF number, there's no negative repercussions to that. Good information. So now we have a NIF number. You've come here, we've met, you stood in line at Millennium, you open up a bank account. We find a space, we want to buy it. Now, when we enter into the purchase, we've already gone through that whole process. Now it's 3 years later, your life has changed. Your kids want to move to Portugal and visit you more often, or you have grandchildren you need more rooms for. So for those reasons, we're going to sell this one and buy another one. So what happens as a non-tax resident versus a tax resident in selling a property? As a non-tax resident, you're based on your capital gains at a flat fee of 28%. As a tax resident, you're billed up to 48%. There's variables in there. It's income-based. There's some other factors, but up to 48% is the best I can give you. Genuinely, there are more benefits to selling as a non-tax resident. Now, if you're a tax resident and it's your primary, there are some benefits there. But we're talking about what's it like to sell as a non-tax resident right now. What can I write off? The standard stuff, real estate fees, improvement fees. So save all your receipts. Anything you invest in it, you can get back out of it. So that's standard, I think, throughout a lot of the places in the world, but definitely here. So now we've sold, we've paid our flat fee of 28%. We've reduced the cost by the lawyer's fees, the real estate fees, our renovation fees. We have a chunk of change. We're going to roll it over into our next property, and that also can have positive repercussions on the amount of that 28% that you have to spend. Would it mean delaying the 28%? Would it mean a reduction on the 28%? That's all something we have to figure out, because I think it's not as structured as a flat fee. I think there's some variables involved. Selling as a tax resident, there's more benefits sometimes if you're going to reinvest, But if you're not going to reinvest, you're going to take your money and move back to another country, then in fact, it's a higher percentage. And so for those reasons, sometimes there's more benefits on being a non-tax resident, oddly. But if it's your primary residence and you're a tax resident and you want to roll it over to another primary residence, there's absolutely some benefits there as well. All of this is subjective. All of this needs to be on a case-by-case basis. There's only certain numbers I can say are guaranteed as a flat fee, and that number is 28% non-tax residents flat fee. I hope this helps. I hope it motivates you to come and buy not only once, but possibly twice, 3 times. And let me know if there's anything I can do to help you when you get here. I look forward to working with you as your buyer's agent. Thanks for checking in and listening to my tax resident, non-tax resident percentage capital gains conversation.